How's everyone doing today? Just want to do a video, show you a few new things. First of all, I'd like to talk about the new Twigs money flow indicator. And this is an indicator that I picked up recently. And you can see here from the purple right here in these two sections, this thing calls dead accurate bottoms. And I have been using also, and will continue to use, this green ribbon up here. The green is bottom and the red is top, especially when you have green histogram bars. You gotta sort of go like this, and that are showing in it. But anyway, the purple section here shows pretty good bottoms on this. So I am employing this in my trading, but the majority of what I'm doing while I'm trading is I'm using an indicator called a stochastics RSI, which is a combination of two indicators. You can see here when it's brown, it's going down. When it's yellow, it's going up. Basically, when it gets down to this part of the chart, that means it's going to go up. And when it gets to the top part, it's going to go down. There's other particulars I will also talk about in a second. Here's a little list of what I'm talking about in today's video, and I'm just referring to it here. I found something on the cubes, on the QQQ. You could go all the way down to $10 options. And I looked, and those are moving great. Those are moving like 2 to 3 times gain a day if you get in at the right part. It's great for curve learning on how to play options, and it takes the fear out of option plays. So usually, let me take you over here again to the options tables. Usually when you're here at the money, you're at, this expires at the end of the week. You're at $2, $3, $4, and that's kind of tough. You save up, and then you're really nervous about hitting that button, and then things go sideways, and you're like, oh damn, and then you don't know what to do, and then you don't have a follow-up backup one to short up with. You come down here to the 10, 14 cent options, actually around the 10. This 14 was 10 earlier yesterday. You come down to the 10 cent options, they got great volume, and you can have a staple of horses of, say, 10 cent options. You could have 5 or 6 in your stable, and you're ready to go, and you could use them like darts. Now, let me show you what I'm talking about. Okay, something goes a little bit wrong, so let's say the indicator starts to climb, you have a 10 cent option out, all of a sudden the next day, boom, this thing goes down. But you could see it still goes up in a yellow, so that's like divergence. If it had gone down and this had turned brown, then that means it probably would go down again. But since it's still yellow and then goes up a little bit, that says this is a buying opportunity and this thing's going to continue to rocket up. So on this down day, instead of turning brown, it advanced up from here to here and stayed yellow, which means up. So that would have been a great buying opportunity to get in. And here comes the staple full of $10 horses, as it were, $10 options. You're moving, you're grooving, you got $10 options. You can press that button and not sweat it. They're not $100 options. You could go $10, boom, you hit it on a dartboard. $10 options, boom, another one on the dartboard. And it's a great way to get that curve going so it's not so choppy. Double up a little bit, correct an error maybe where you got in a little bit too early, but then with the other $10 option, things start to take off a little bit, and you got 50. You can be constantly moving, selling them, moving around here and there, and it really helps you make better money. You're less fearful, and you can really round off that curve and get things moving pretty nicely. You have like 5 $10 options to play with. It goes down one day when you didn't think it would be, buy some more at a little lower. And if you know, because of the chart, that it's supposed to go up higher, and then it just continues up higher, and you average down, and you really start to make some pretty decent money with that. So have a stable full of $10 options. They're cheap to work with, and it's a great learning tool because you're not sweating the $10, from these options like you would $100 options. It's a great tool to play with. Okay, back to Stoke RSI. This is a great indicator. You want to use this along with this ribbon, okay, and be mindful of these purple bottoms. When the ribbon's going up, it's going up. When the ribbon's going down, it's going down. It usually cycles between green and orange or red. Green, orange, or red. Hits the green, goes up to orange and red, hits the green, and it does that 80% of the time, and you follow it up with these. So once again, brown is going down. When it hits the bottom, and you look, all right, sometimes it can be on the bottom for a while, so you want to look. Do you have the green? See here, you didn't have any of the green histogram, only over here. You want the green histogram going through the green bottom. That's a a sign where it says go. Then you buy in and you go up, and if there's a dip but it's still yellow, that means average down, get in some more. If you're in a down cycle where all of a sudden it goes up, however, it's still going down as a brown color, that would mean average down again, so you keep going. Now, again, let me go over that again. You saw it came down a little bit here, but it's still yellow, meaning up. Why would it go down, but still go up over here because of yellow? That's because the indicator's telling you there's too much buying pressure, and you could get in with another $10 option and keep going. Just the reverse. So if it's going down and you're in the brown section, and then it goes up all of a sudden one morning, but it's still brown and even still continuing downward, that means you could buy another put and average it and get down. And that's not too common that happens, but the indicator will tell you, watch the colors, watch what it does. So once again, great indicator. Now you can see here it's coming near the top. However, there's an open gap here. And over here, see right here, this ribbon told you it's done, and this would mean buy puts usually. And it's near the ceiling here, so you want to buy puts. But you saw up here, you could see the DI plus and the DI minus has a big cavern going here with the DI plus on top. That means strong upward pressure until this cavern closes, okay? And then things go back to normal. It closes, and then you can see the Stochastic RSI. It's like, okay, now I could go. Then it goes down. So always look for those big caverns, okay? Here one's forming, all right? So even though this is at the top and this is starting to go into red, I see a cavern forming. Until this crosses the DMI control line, I might not want to do anything. So tomorrow, this could just suddenly keep going. So you have to watch that. But this is a great indicator, Stochastic RSI. Find that in TradingView. I'd like to give you a little example of how to purchase either 10-cent options or $1 options. Now you may see that the Stochastic RSI says buy, and so you might think, well, I'll buy, and you could do it any time during the day. Well, that's not true. And let me give you a doctor's appointment as an example. You got a doctor's appointment on Tuesday. Okay, well, what time Tuesday? If you just show up any time on Tuesday, you can miss your doctor's appointment or be a couple hours too early and sit there. You don't know. So not only do you have to know the day, okay, of the doctor's appointment, as in the day is like it's going up here on the 29th, but you have to know when on the 29th to get in. And that's where the 5-minute chart comes from. Let's look at the 5-minute chart. And we will use yesterday as an example. Okay? Now you could see that the time since this chart yesterday was going up. Okay? It was going up yesterday. So now we need to know, well, what time do I get in? If it's going up, you obviously want to get in at the bottom of it going up. And so you could see that was right here. Now, if you got in too early in the day, like 10 o'clock or, at open, it would have been way too high. And that wasn't the time to get in, okay? If you see, once again, if you see this chart is saying, I'm going to go up there in the next few days because you're seeing yellow wafers going up, you need to use the 5-minute chart to know what time during that day to get in. And so you'd want to get in at the low part, which would be the green, and that's when I got in. And then towards the end of the day, I sold, and it moved almost 100%, okay? And you could lose money if you get into the wrong part during that day. If I got in, trying to get in the bottom, but I got in at the top near the red ribbon, I would have lost money. So let's take a look here. All right. That's not near the top yet. That's another Stochastic indicator I use. You could find that on stockcharts.com. But let's look at option pricing and what happened. All right, here's the QQQ. I'm going to go to options chain. Okay. And I'm going to look at the $1. What would have happened on that day? Remember where I showed you I got in at about 11:45? I'm going to show you the difference if you get in at the wrong time of the day. And that's vital. That's the difference of not using that 5-minute chart after you look at the 1-hour chart, because I'm using the 1-hour chart as my main. But if you don't look at that 5-minute chart, you're not going to know when to get in, and you need to know that. So let's go back to about here. That's about right. Around 274s if you're playing the $1. Okay, after you started playing with the 10 cents, you work your way up to $1. Now let's look at the 2-day chart, because that was not today but yesterday. So let's look at the 2-day chart. come on. Load. Alright. Now, you could see that getting in at about 10:45, okay, all of a sudden, by the end of the day, it was upwards towards $1. So you would have made a lot of money. Right time to get in, because remember I showed you the ribbon? You wanted in on the green, and then you sell on the red. See? You can make a lot of money doing that. Now, once you've been doing this with your stable of 10-cent options, and you're playing around, and you're learning how to options trade with the 10-cent options, because you have no fear. They're only $10 a piece. You could easily replace them. You have a stable full of about 5 of them. You're using them as dartboards. You're getting in at the right times, and if something unexpected happens, you could back it up with another $10 option. Once you work up to $100, which shouldn't be that long, suddenly you're playing up here, okay? You're playing up here, and then, look at this. You're playing with the $1 options, and if you're getting it at the right time, like I showed you before with the ribbon on the 5-minute, and you get in at the right time with these $1 QQQ options. Usually I like, by the way, as an aside, I like playing the same week of expiration, but if it gets about 2 or 3 days in front of expiration, I'll just go out to the following week. You know, it starts getting too volatile when it's like 2 or 3 days before expiration. But look at this, okay? The day's range, 100% change, okay? So, previous close, $1, then open low, and you don't hold overnight unless the ribbon tells you you should. Okay, let's see. No, you probably didn't want to do that because it was towards the end of the day. It was, wait a minute, sorry, that was the 5-minute. Should you have held overnight? I usually don't like to hold overnight now. It's usually those same day plays, but let's see, 27, 28 August. Okay, why? See, that's something I want to look at. Like, why did it, like, probably was down early in the morning. But anyway, so with the $1 QQQ, there's your difference, 100%. You can make some nice money if you use the ribbon and you know when to get out and when to get in. Okay, so for example, today, what day is today? Right here. That was today, right? August 4th, but why is it saying... Oh, that's right. Today, the peak was kind of near the morning, and then it got low down here, even though it looks like it went sideways. Alright, I'm starting to lose focus here. So back to it. If you change it to the 10-cent options all the way to the $1 options, you want to take those 10-cent option profits, right? And then you, with house money, you can buy the $1, okay? And what's possible with $1 options? Doubling it. All right, if you get in at the right time in the green and sell in the red, or if it's going to go down, buy in the red, puts in the red, and sell your put in the green, you can make 100% a day, 80% a day, 70% a day, 100% a day, which is nice because that's like doubling your money if you get to 100%. So you have $1 that you have your $100 that you already got from your 10-cent options, and suddenly you're playing with 200. Then you can play with 400. You can play with 800. You could keep doubling. That's dangerous, of course. Or you can like double all the way up to 400, but then just stay at 400 and just keep saving piles of 400 as you make 400 in case you want to start shoring things up like you did with your 10-cent options and have like 400, a stable of 5 or 6 $400 options, and just make money like that. Okay, guys, that's the end of the video for today. Thanks for watching. Tell me what you think. Bye-bye.